I'm Gary Thompson. Today we'll cover 3 upcoming events that may impact market activity. So let's begin. Washington and Israel launched large-scale strikes in Iran on Saturday. Iran's supreme leader, Ayatollah Khamenei, was reportedly killed. Tehran retaliated with attacks against Israel and Gulf states that were hosting US military bases, including the UAE, Qatar, Kuwait and Saudi Arabia. Markets reacted sharply, as you would expect. Oil prices jumped more than 8% on fears of escalating conflict and potential supply disruptions. Global stock indices fell across the US, Europe and Asia Pacific. So-called safe haven demand strengthened. Gold and silver gained over 2%, while the Swiss franc and the US dollar advanced. Well, what's next? Well, a prolonged closure of the Strait of Hormuz, a key transit route for global crude, could push oil into triple digits. In our previous video, we outlined the possible scenarios if US-Iran tensions escalated further. Might be worth having a look at that. Now, some analysts are warning of a 1970s style energy shock, while others argue that an extended Hormuz shutdown could trigger a global recession. President Trump himself has said that the conflict could last up to 4 weeks. So for traders, disciplined risk management will be essential in the days ahead. As for macroeconomic events, the week's biggest risk event arrives on the 6th of March at 3:30 p.m. GMT+2 as the US Nonfarm Payrolls and unemployment reports. Now in January, the US economy added 130,000 jobs, well above December's revised 48,000 and stronger than expectations of 70,000, the highest reading since December 2024. The unemployment rate declined to 4.3%, slightly below market expectations. The market reaction was mixed. The US dollar strengthened as traders pushed expectations for Federal Reserve rate cuts further into the future. US equity indices initially rallied, but gains faded as markets priced in higher interest rates for longer. Now, this week's report could trigger sharp moves in major currency pairs and US stock indices, keeping volatility risks elevated. Markets won't wait until Friday. Earlier in the week, business activity data could already shift dollar expectations. Now, on the 2nd of March at 5 p.m. GMT+2, the ISM Manufacturing PMI will be released. In January, the index rose unexpectedly to 52.6, signalling expansion in manufacturing for the first time in 12 months and was the strongest improvement since 2022. Then, on the 4th of March at 5 p.m. GMT+2, markets will reveal the ISM Services PMI. Now, the previous reading held steady at 53.8, beating expectations and confirming continued strength in the largest part of the US economy. Now, together these indicators provide insight into economic momentum and may trigger short-term volatility in major US dollar pairs. Stronger than expected data could support the US dollar.